All right, boys, we back. Pivot points. So I'm not an expert at these, but I'm just going to give you my best rundown on how to use them and why I use them. The most important one is that you got to know market makers, the ones that are on the other side of your trade, are using pivot points. And I don't know how many days I've been watching the markets and watching price action and seeing the patterns unfold. I see the pivot point is almost always, I'm not going to say always, almost always a point of interest for everybody. The daily pivot, the daily main pivot. That's kind of like my first starting point. So looking at this particular chart, I'm just pulling up a random one, just Ethereum. It just had a nice little sell-off. It's just what I was looking at when I decided to do this video. But I'm looking at this middle pivot point here, obviously sitting at 1930. And this is just the 4 hour. I was really looking at like the 1 hour just to kind of see what's happening. But I pulled the full 4 hour up so we could see the other pivots come into play as well. So I'm using this one here. This is kind of like, this is for today. I just want to see what kind of range we can expect for today. So if you're an options player, this was big because, if you're expecting a big range day versus a balanced day, if you're expecting a big range day, then you've got some natural points of interest here on the upside and downside that are just natural, that are just put into the chart for you and calculated. You don't have to think about it too much. And obviously there's going to be more to this. So I'm going to show you, if I was going to play options here on Ethereum versus just buying the stock or whatever, buying the actual coin, I'm looking at this middle pivot point here at 1930, and it's already looking like it's becoming a point of interest for everybody. You can see it sold off. It sold off into this yellow line is the weekly pivot point. All right, so we have a weekly and we have a daily support. So we have a weekly resistance because this is the weekly mid pivot point. It's like the bigger brother of the daily. And so we're above that level, which is already bullish. And I kind of always look at that too on a stock or a crypto, is where are the pivot points for the yearly, monthly, weekly. So right now this is the yearly for Ethereum. The yearly is way down here at 430. So this thing is crazy bullish or overbought, whatever kind of trader you are. I look at it as really bullish because the momentum is just insane, that it just way outpaced the pivot point that's just created from last year. So huge bullish here. You're already above this one. Here's the monthly one for February. So you have a mid pivot point here at 1,020, way above that. So the momentum is still obviously carrying it way past what January was calculating the resistances to be. However, if you're looking at a daily here and you're looking at the monthly, I had someone comment about this. Is a very important point, is that we're sitting here at the resistance 3 on the monthly. That's the monthly calculated from January. So now this is February's, but the way they calculate these, again, I don't know the formula, but I just know that it's based on January's price action. And so then they calculate some extensions. Now these extensions can go on forever. I've seen price way outpace the pivot points. So something super bullish like Ethereum could easily bust through this. But this is where it stopped, is right here at the R3, which stands for resistance 3. And you got a weekly for this week, which isn't over yet, and it's calculated based on the price action of last week. You got it busted through R1, and now it's sitting at R2 for this week and an R3 for the month. Okay, so this is our context here. We're looking at the daily. So our context for Ethereum is that it struggled. It went to like 2050, but could it hold this level? It hasn't yet. Hasn't held it on a daily. This is very important if you want to see Ethereum go higher in the near term. You don't need this fancy, chart or anything just to play with pivot points. I mean, it's really this. You could really just have a basic candlestick with one moving average probably, and that's the way you would use these. But we're waiting for this breakout here at about 1960, 1970 range, and you want to see a daily close above that. That would be ideal, because then that would signify that it wants to potentially head higher and test this 2160. Now, we don't have a lot of time left with this weekly pivot. This pivot's going to be recalculated next week. So I don't know, the new pivot point will probably be quite a bit higher, probably something around 1809 or so, and then you'll have a new pivot point to play from. Now, the idea behind this is you want to look for natural patterns that show up around these pivot points, because that's what typically happens. Is if the market is trying to bust through a resistance level, it'll set up a nice little ascending triangle, ascending wedge, descending wedge into support. You'll get some kind of consolidation pattern, that'll continuation consolidation pattern into that resistance, so that it can build up enough momentum and eventually get through it. Or it rejects off of it, and you know that it's just not going to happen yet. You got to wait for the next setup on there. So that's kind of the way I use them. So you're sitting here, and I mark this on the daily, and it shows up over here on this hourly chart. So now we're looking at Ethereum, which just it failed its hold of 2000, which really, that was only a psychological level. All that happened here was just what you would call an excess high. Is the psychological level came into play, and then a bunch of people just went in and thought this was going to just rocket, because Ethereum has been kind of lagging behind Bitcoin. But Ethereum's not nearly as good as Bitcoin. I mean, it's pretty good, but this is the reason why it's lagging. And it'll catch up eventually. There's a reason why it's lagging right now. However, this was just an excess high, so a bunch of people bought here thinking that, okay, it's finally going to go to 3,000 in a blink. Well, maybe it does here soon, but that was a little bit too premature. You wanted to see it hold there first. Now it's got to break back through here, and you got a confluence of levels here. I'm just going to delete that. So you got a monthly, which is this white, which is the R3, and you got a weekly, which is an R2, which are overextended, essentially, resistances. And now it struggled and it failed. It failed hard off of that, right into the last weekly pivot, and it held that one. And then you had a support on the daily. So this was a good buy zone right here, I would say, if you were trying to play the bounce play real fast, which I like doing. I'll set a limit order somewhere around here, and a lot of times it'll come down, catch the limit order, and then bounce back up when it's something like this. So this right here. I'm just gonna throw out some of my own thoughts and theories on this, but this little action right here, in my mind, was a bunch of overexcited and retail traders that been waiting for Ethereum to finally moon like Bitcoin, because they missed Bitcoin. And so once it finally breaks this $1,000 or $2,000 psychological level, which they've been waiting for weeks and months, I know, because I'm sitting here waiting for the same thing. Well, they go crazy and buy this thing and push it through, but there's no momentum, because there's no real reason to care about the number 2000. There's no other fundamental reason behind it. It's not like institutions are coming back in and buying it. It's a weekend. Does this institution care if Ethereum's at 2000 or not? In fact, they probably don't want it at 2000. They probably want it back at 1000. So it's like the big players aren't necessarily trying to drive this up higher. The big players are waiting for the little guy to come in, get excited, and then then they sell into it. And then all those excited guys, once it falls back under this resistance level, they all sell. So that's where you have this massive sell-off. All these guys just dumped, and then you can pick up shares here. Shares or coins, I'm talking whatever, it's the same thing. But now you've got a resistance here, so it oversold. It came right back to the day's mid pivot point. Anyway, so this is where you can get into different strategies using the pivot points. And I know a lot of people, newer traders, look at a system like this, and they just want to be able to go, okay, the chart tells me to buy, so I buy, and the chart tells me to sell, so I sell. Well, you can trade it like that too, for sure. Like, you don't need these pivot points. and you would have probably been okay. Look at this. You would have just bought here blindly and not think about it, and then sell here. You made 60 points in profit there. So there's nothing to be mad about. Or you sell up here just because you just ran up 100 points, 110 points. So you can trade it like that. But these pivot points have nothing to do with these buy and sell signals. These signals here for me, when I'm using this, is all it is just another indicator. Because this system is only trading off of this super trend is nice, but it's only trading off of just this little line here that gets generated, which is just like an average true range, like trailing stop type of line that gets generated after the previous one gets penetrated. So this one got penetrated, so then it generates a new buy, so a new line of support that just kind of rolls with the price action. That gets penetrated, and then it goes back down until this one gets penetrated to go back higher. All it is an indicator. So you can blindly buy off of it, but I would say add in some extra stuff so that you can have better confirmation. Just add in that extra confirmation so that you're not getting blindsided. Because your goal in trading is honestly, after the years of me doing this, has been to not get screwed. Basically, if you listen to a lot of good traders, they're always talking about risk first. Think of risk first. So think of how much you could lose, because if you go into every trade expecting zero, expecting to lose, expecting to be wrong, then you trade a lot differently. You're going to trade with a different position size. You're going to trade with a different target in mind. You're going to trade a lot more cautiously, because if anybody was watching CCIV, I'm kind of going all over the place here, but I just, this is kind of where it's taking me. But if you're watching CCIV on yesterday, a lot of people got blindsided by this move here, right? I sold, and I sold just because I didn't like what was happening. I'm not going to go through all the reasons why I sold, but the main reason, I'm looking at this chart, and you had a initial sell there and a buy. This buy never took out the recent high. I just kind of trailed. It could never break through this point of control. It sold off there, and then look what happens right at the pivot point. It comes to the pivot point. People bought that up. Bounces up to the point of control. Can't get through it. And everybody just gives up, and then somebody comes in and manipulates this thing. I don't know what happens there, but there's a huge dump right at the pivot point, right to, look, it's like the same pattern as Ethereum, right to these pivot points. So you got a weekly here, and you got a daily that are it's like a confluence of support right to that level. So here's your bounce buy again, that you could set some limits. Once you see this kind of start happening, just set some limits here, and you can get the shares at $50. It's like a little gift. If you think this is going higher and it's been at 60 for a couple days, it'd be nice to get it 10 points cheaper. However, I did not mess with this. I was having my own problems over here with QS, and this thing wasn't acting right at all either. So, and I was kind of using this as a gauge for CCIV. I mean, they're kind of moving together. I don't know why they were, but they were kind of moving together, and so I was just not happy with what CCIV was doing. I wasn't happy with QS. Anyways, back to Ethereum and what's happening here. So this is the 5-minute. And so then you can use these other time frames. I use these other time frames for clarity, because I'm looking at the hourly. I want to know, what's going to happen in an hour or two. And does it clear this pivot and try to head back up? But you can kind of come in and kind of see what's happening on the lower time frame, and we'll probably see it trade here a little bit around this pivot point, which is good. You want to see it kind of hold, maybe see an hourly close there. But on a stock, if you're going to play options, like let's talk Futu here, something I do have an options play on. I was looking at this as, let's go back to the hourly. I saw this happening where we're in a buy from Thursday, and I like that. I mean, this thing is a monster on the daily, and you still have a lot of room. You still had a lot of room on the weekly to go higher. So it never really got a chance to because the market's been it was kind of a bad week for the market. So these high flyers didn't really. I mean, it did have some big days, but that's probably why it was kind of weak on Friday. Plus, it was monthly OPEX, all these other factors that were involved. So I do want to see. I did take a trade down in this zone here. As it fell back into the pivot levels for the day, I saw it kind of trying to recover, and so that's where I took my options play, because you never want to buy options as the volatility is expanded. Right, if you're playing weeklies, especially, you want to get them as cheap as possible. It's all about getting them cheap, getting the right strike, and getting them cheap. And so, depending on what kind of trader you are and what kind of capital you have, that's going to also depend on what kind of strike you buy. Now, we saw a rejection here at 197, 198, and I marked it on the screen because there was a ton of volume there, and that's where it dumped. But we'll see, as far as we see a print on the pivot here up at 213. We'll see what the next week's pivots start looking like. But I ended up just buying this 190 here at the bottom. I bought the 190s for next week because I saw it holding up here. I mean, it ripped through there already once, so it's already kind of penetrated there. And then this was just kind of an oversell reaction, probably some manipulation. I don't know, just because of the OPEX day. So I kind of discounted a lot of this craziness that happened on Friday just because it was, double witching or quad witching or whatever you want to call it. It's just options expiration day. A lot of weird stuff happens. So I looked at this as kind of a gift because I think, obviously, I think futures going to head a lot higher. So that's how I kind of play during the week. I'm looking for strikes on the weekly. So if you were playing options on this during the week, so let's go back Friday, Thursday, Wednesday, Tuesday, Monday. So we didn't start trading until Tuesday. You can play these. Look, it opens up right at the weekly pivot. Obviously, this is where it's going to print. This is the new one on Monday. It prints a weekly pivot right off of the pre-market. And so you can play this as support right away. And you can target the first R1, which was 190. And you could have just bought the 190s right off the open. All right, it struggled with 190 all week. But here's another way to look at this too, is it hit 190, it came off, the sellers, volume was kind of low on the days that it was down. It tried to rip again. And the reason it was down is because it owns Webull, and they're having their Robinhood conference and all that, whatever, and so people are kind of getting nervous, so they're selling it off, and then they rip it as soon as that conference is over, and they didn't realize that government wasn't going to put any new regulations. What are they going to do? Did you guys watch the conference? I mean, these guys are complete retards, so they have no idea what they're talking about. AOC's on there, and I don't mean to bash her, but she's a complete moron. So it's like, that's what happened here, was that everybody was like, okay, these guys are idiots, and they just ripped the thing higher. And it was an overbuy, overreaction, and so then they dump it as it busts through 190. But you can kind of see the general idea here of what people are trying to do. They want this thing higher. And you see less sellers here. You see a rip again. You see small sellers here. So I imagine this thing actually opens over 200 on Monday if the market's good. That's just kind of my play with Futu. If the market's good. If the market's bad, who knows? It would probably just be sideways. But that's what I would do. That's how I would play these as strikes for the weeklies. Now, if you're playing monthlies, not many options for you. If you're trying to go out to play leaps like a Greg Manarino or something like that, playing in the monies 3 months out, you don't really need to worry about picking a strike. So hopefully that helps. I don't use like these exotic type strategies, iron condors, or I don't sell I don't really sell credit spreads that often. I don't really like doing that. If I'm going to buy options, I usually buy weeklies, and I usually try to stay pretty close to the money, but a little bit out. I'm usually a little bit out, just because, I have a pretty good idea if a stock is trying to make a move to the next level. So if I know it's trying to make a move to the next level, then I just want to ride with it. I just want to go with it. So anyways, that's hopefully this helps you. It'll probably create more questions than it does answers. Please leave me a comment if you have any questions on this. Hopefully it's not too confusing. Again, you guys don't need to use the pivots here. I'm just using them just because I've always used them. So yeah, like, subscribe, comment.